Problem 12.8 is a lengthy problem, and we combine what we learned in problem 12.1, 12.2, and 12.3. Remember, there are 3 parts to new project analysis, so what I'm going to do in problem 12.8 and problem 12.9 is divide these problems into 3 separate videos. The first one for each problem is going to be calculating initial investment outlay. So I'm going to read through the problem, and then I'm going to tell you what you need to be able to pick out to count towards the initial investment outlay. Problem 12.8 on page 431 says this: you must evaluate the purchase of a proposed spectrometer for the R&D department. The base price is $140,000, and it would cost another $30,000 to modify the equipment. The equipment falls into the maker's 3-year class and will be sold after 3 years for $60,000. The applicable depreciation rates are 33%, 45%, 15%, and 7%, as discussed in Appendix 12A. The equipment would require an $8,000 increase in net operating working capital, that's spare parts inventory. The project would have no effect on revenues, but it should save the firm $50,000 per year in before-tax labor costs. The firm's marginal federal plus state tax rate is 40%. Most of the information that you're reading in this problem relates to section 2, where we're estimating cash inflows. All we're worried about right now in part 1 is the initial investment outlay. So for my initial investment outlay, I've got to purchase this spectrometer with a base price equal to $140,000. Also in the information it says we are going to incur a $30,000 cost for modifications. And remember, we get to roll that $30,000 into the value of the asset. Finally, we have an increase in net operating working capital, and they tell us this is spare parts inventory. So inventory is going to increase by another $8,000. And we have our initial investment outlay of $178,000. So what we would do is go back up to our timeline, and next to year 0, where we're going to incur our initial investment outlay, we'll put minus $178,000. One thing that I do want you to note at this point: when we begin depreciating this asset, the asset's depreciable basis is going to be the sum of these 2 items. So I have this spectrometer on my balance sheet at a value of $170,000. That's my depreciable basis. This $8,000 is classified as inventory on the balance sheet, which is a current asset which is not depreciated.